in here. Good evening to everybody. Everybody that's pulling up, y'all come on in. Let me show y'all my handsome face. What's going on, man? How y'all doing today? How y'all doing? Talk to your boy. Holla at your boy, as they used to say back in the day. Holla at your boy. How y'all feeling today, man? Man, I don't know if it's these supplements that I'm taking or what, but man, 5 minutes after I eat, I feel like I need to eat again. Your boy done got trying to get back in the gym, get back to working out. Shout out to anybody that's pulling up on IG. If y'all go to the tube, you get a chance to see the screen and all that. Yeah, man. If you go to the tube. But good evening, everybody. If you happen to be on the talk of the ticks, I guess you didn't delete your app like my son did. My son deleted his app on the 19th. Or I think it was the 19th. I don't know, whatever day they supposed to stop. He deleted his app. He said, man, I need storage. TikTok out of there. Delete the app. Man, I see son, TikTok was only down like 12 hours. I know, and I can't get it back. It ain't in the app store no more. I got some friends. His wife deleted her app, but he kept his. And they influencers. They social media influencers. And so she deleted her app. I'm like, why would she delete her app? You an influencer. You supposed to hang on to it just in case. But he kept his, so they still good. They can still post content. But I was like, man, these folk were like, man, TikTok gone. Let me save these 800 megabytes on my phone. I need that. Does the new tax law affect short-term capital gains? I haven't seen it. I haven't looked at the new tax law yet. I have to research it. You know what I'm saying? But I haven't seen how it affects short-term capital gains, right? But I do say do your research on, if you are trading, do your research on the tax laws. Long-term capital gains, short-term capital gains. If you're trading futures, know about, I think it's like 60-40, something like that. 60% of it is this, 40% of that. Know what the tax laws are. Talk to your CPA, tax advisor, financial advisor, fiduciary, whoever you got in your life to handle that business. Appreciate that, the Blackout Davis, for bringing that up. Y'all slide on over here to the tube, because I think it's my last time looking over there at IG. Or just hang out right there and just listen, man. You hear me? All right. Good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Haranya Grande. Man, that's just Big Spider if you don't hablo Espanol. Hey, you are in tune to another episode of the Intraday Price Action Recap. Let's see who up in here, man. Who up in here? We got Hit to Learn Share up in here. We got Thomas up in here. We got Kim up in here. We got Shonister up in here. We got Rhonda Green up in here. Y'all shout out Rhonda Green, man. Rhonda Green done got back on the note taking. Rhonda Green and start putting the notes back in the live stream videos, right? Rhonda, if you do notes on this one here, then I don't know. I think she used to do the notes on the ones where I be saying something good. So just in case I say something good in here, Rhonda, at this point right here, whatever minute marker this is, right? How long we been on here? Whatever minute marker this is, right? Say 7 minutes and 45 seconds. Shout out to me, baby. Put that on there. Put shout out to me, baby. Shout out Rhonda Green for always coming through and putting in the note taking inside the YouTube chatter rat. Shout out Rhonda Green. Man, who else we got up in here? We got the Black Al Davis. I think I said that. We got Tish up in here. I think I see more numbers than I see names over in the Discord. We got Jim up in here. We got your. Oh, I already shouted you out, Shonister. You trying to get shouted out 2 times. All right. Here we go, man. Let's get into it, man. Let's get right into it. Let me go ahead and share my screen with you all. If I come over here and share my screen with you all. Do this real quick. Okay, share my screen with you all. All right, clickety click there. Share my screen with the Discord. All right, sorry Discord, I wasn't sharing my screen with y'all. All right, let me share my screen with you all. Wait a minute, Shonister, what you doing up there on the screen? Shonister say, I'm gonna get some attention. Alki talk about I can't talk in the Discord. I'm in the chat on the YouTube. I'm gonna pop up on the screen, Playboy. Shonister, get off my screen, Shonister. Yeah, let's get to it, man. Hey, man. Today on Wednesday, the 22nd of January, right? The market went up. The market went up. See, we went up. Look at this right here. The market went up. All right. So if you were the type of person, right, who, oh, wait a minute. Let's go back and do this, right? Y'all know every now and then, I like to address the haters, right? Y'all know every now and then, right? A hater. Let me go full screen on this right here. Discord, y'all can't see my screen, right? I'm gonna go full screen. Every now and then, haters, right? Haters, if anybody on IG, if anybody come over to YouTube so y'all can see my screen. Every now and then, haters like to pull up in my comment section, unsolicited, just to give their opinion of Michael J. Huddleston. Like, I really care. I don't know this man. I've never met this man. I wish him no ill will. I appreciate him as a human being who decided to share his life's work with all of us. Right? So, I don't know why people have such disdain, if you will, such just disgust with what this man says. Why they have such a big issue with him. But their issue is so gargantuan that they have to come over here to my little old bitty YouTube channel and express their disgust with me for using the concepts that he teaches. No, run. No, run. I appreciate him. But I think the only person I thank God for is my wife. I thank God because God is good and my wife is amazing, right? I really appreciate what ICT does, right? I really do. I could not thank that man enough. But it don't even go that deep for me to say thank God for ICT because it's really not that serious, right? Because I don't say thank God for my first grade teacher. She taught me a lot. Thank God for my high school counselor. She taught me a lot. Thank God for Miss Hines, the secretary at BA High School in Fort Lauderdale, Florida, because she had a booty. She had a booty. I don't say these things, right? So it's not that deep for me. I appreciate everything all educators done for me, but it's not even that deep to say thank God for this person. But these people still find their way to my little old, I don't even have a big, my YouTube page is very tiny. And they still find their way over here to express their disgust with me for using the ICT concepts. That don't work. That's a bunch of garbage. He's a scammer. That stuff don't work. He's a scammer. Now, the reason why I said all of that is so that you too can maybe share in this pleasure of poking the bear with me. If you're with me, somebody type poke the bear in the chat. Just type poke the bear. And if you don't want to type poke the bear, just put a 1 in the chat if you're with me while we poke the bear a little bit. Now, let me share my screen, right? If you remember, if you've been hanging out with us for at least a month, you know what I'm saying? At least a month. If you've been here longer than that, then you know, right? When I come over here and circle this little area of consolidation right there, right? Back when price looked like this, right? Price looked just like this. And one of the gang's own, by the name of Kashaya, said, Tim, does it look like we're in a market maker buy model? And I said, it don't matter what I think. Let's look at the signatures and price. What's cracking, FC? Let's look at the signatures and price to see if we're in a market maker buy model. And if we are, then we're going to look for a reasonable target to be our initial consolidation. Right? So at that time, right? And if price looked like this is where price was because it had displaced up above this high right here. This is where it was. Yes, it was. It was there. Right? So that right there is on Wednesday, January the 15th. Right? This is where price was. Wednesday, January the 15th. Right? So at that time, we said, this appears, why is this not black? Come here. Okay, this appears to be the smart money reversal. This appears to be the low risk short. This is evidence of institutional sponsorship. If we have evidence of institutional sponsorship, another evidence of institutional sponsorship is that the institutional sponsorship left short-term liquidity, right? Short-term liquidity in the market, right? So we have evidence of institutional sponsorship, apparent smart money reversal, apparent low risk buy. If I said short last time, I jollipies. Low risk buy. And I said we are waiting for the confirmation of respecting the discount PD arrays, right? Respecting the discount PD arrays and not taking this low. If we respect these discount PD arrays at this moment here, we will know that we are in a market maker buy model, and whatever happens over here would be our first area of reaccumulation, and we will be targeting that high right there as our price delivery. Right? Over days and days and days and days and days, we have been saying this. If you remember us saying this back at this time, and if you remember hearing it throughout the remainder of this market maker buy model, say, I'm with you in the chat. I'm with you. You got to spell it right. UMWITCH. All one word. I'm with you. UMWITCHA. I'm with you. Nuh-uh. UMW. Nah. There you go. So now, long story short, this is where price is today. Golly gee williger beef, would you look at that there? Where did price go today? Golly gee williger beef. If you, who in the Discord? Somebody in Discord unmute and say, golly gee williger beef. Who remember that? Who remember that? Who remember that? Golly gee williger beef. Is there anybody in here old enough to remember that?
Golly gee. What?
Golly gee williger beef.
Golly gee williger beef.
What? I know Deborah. Deborah ain't in here tonight. I know Deborah know what golly gee willigers is. Golly, Ron Thompson said he know. Leave it to Beaver. That's what I'm talking about. It's from Leave It to Beaver. He used to say, golly gee williger. And Beeve was the beaver. They used to call the beaver Beeve. Golly gee williger Beeve. Golly gee williger. That was kind of like WTF back in the 60s, 50s and the 60s. I think that meant WTF. Golly gee williger. Okay, so enough of poking the bear. Enough poking the bear. It is somebody on Al Gore's internet, right, charging you $19.95, right, for this information that we just hanging out every day, being silly, talking about, right? It's a whole lot of free videos on my YouTube talking about the same thing that I talk about in the boot camp. Talk about the same thing me and the gang talk about in the Discord. The only difference is you get to interact with me, right? With me. Like I'm the type of person I need to see it and be able to ask my question right then. Looking at recorded videos, they don't always work that well with me. Just start quoting the Brady Bunch, Good Times, Red Fox, All in the Family. What you talking about, 80? What you talking about, 80? I'm telling you, me and the gang got dynamite. You feel me? Hey, man, let's get to it, man. Y'all know I can't stay focused. Now, today's price action. Let's talk about today's price. Do it first before we start. Do anybody got not Andy Griffith. Hey, you know what? For the longest, I think until I was like grown, I thought his name was Andy Griffin. I thought it was Griffin. like Eddie Griffin. I thought it was Andy Griffin until I got grown, I think. Hey, do anybody got any questions or anything they want me to address or help clarify, if I can, something that might have shocked you about price today or this week or lately, something that might have shocked you about price where you was looking at it different and you want me to kind of help you go through and see, hey, what signature did I possibly miss, Tim? Is there anybody here? Is there a heart in the house tonight? Stand up. Do somebody need some help with something? What's the day? Low resistance or high? From 6 o'clock last night until about 10 o'clock this morning, it was low resistance. After that, it went into like mud. It got stuck in the mud after about 10 o'clock this morning. All right. But it was very low resistance from 6 o'clock last night until about 10 o'clock in the morning. Right. And then, if you go back here, let's poke the bear again. If you go back here and we look at the original silver bullet that Michael Jada Huddleston used to teach, he used to tell us if we get there on the last area of distribution or accumulation in a market maker buy model, we can get an entry on the last area of accumulation of on the right side of a market maker buy model. And when you enter, it'll give you a low resistance liquidity run to your target. And if you look here, that's the last area of accumulation. This right here was our target, and we had a low resistance liquidity run into that target. Woo! Let's raise the offering. Preacher, deacon, do dirty. Please pass the collection plate. Hey, Rhonda, if you do notes on this one here, put in the chat at 23 minutes and 15 seconds, 23 minutes, Tim goes into an old school Baptist hooping session. I'm in a good mood because God is good and my wife is amazing here to learn and share. You hear me? All right. Somebody said something for real. Somebody said, can you show us the proper way to do TDA on the 2022 model? Right now, TDA for any model is the exact same. Right? TDA for any model is the exact same. Okay? That's the first thing we want to know. If you're a notey note taker, right? If you're a notey note taker, let's make this fun a nice size, dear. TDA for any model is done the same way. That's the most important thing we want to remember. We want to make this real big on the screen so everybody can see it. All right? TDA for any model is the exact same way. Okay? Why do I say that? All right? Why do I say TDA for any model is the exact same? Who in the Discord? Who's in the Discord? Somebody unmute and say, I'm in the Discord. Who's in the Discord?
I'm in the Discord.
Jim. That's Jim. I know that voice. Let me see if I'm right. That's Jim. Oh, wait a minute. I seen some other people in the Discord. Y'all sneaking in the back and hiding on me. Jim. Right?
Yep.
I'm gonna write something on the screen first because we are not, and you're gonna finish it with my question. Why is TDA for any model the same? And the answer starts with this. And I want you to finish my sentence. Because we are not
Pattern traders.
Pattern traders. You feel me? You see how Jim pulled up with the heart. I ain't even have to do a whole lot. Come here. Give me my doggone. You see how Jim pulled up with a hard-hitting question. I mean, a hard-hitting answer. TDA for any is done the same because we are not pattern traders. The problem that so many people who don't understand the ICT concepts is they come in and they find model A, right? They come here. Oh, I'm hitting the button. I'm sorry. Right? They come in and they find what we shall give to the court as model A, right? They come in, hey, okay, they come in there and they find model A. And once they find model A, they just run to the charts. And every time, and in this case, it's going to be, model A is going to be the 2022 model, right? Every time they find model A, they run and they just see a break in market structure or retrace back to a fair value gap and they buy. And sometimes it works. Sometimes it works. And they out there just do. I feel good. I know how to trade. I got 2022 model. And then sometimes they go out there and it busts them in the head. You know why I bust them in the head? Because one, first of all, because they don't understand the concepts. That's first of all. What? But they did not know where. I need Siri. They did not know where Picasso lives, right? And if you don't know who Picasso is, yes, get the head bust to the white meat. If you don't know who Picasso is the draw on liquidity. I call him Picasso because Picasso was an artist, and artists, they draw, right? They don't know where Picasso lives. That's the first mistake, is not knowing where Picasso lives, right? Their second mistake, if you want to put them in any kind of order, it ain't got to be in this exact order, right? They don't. Hey, well, I can't see my words. Okay. They don't have a anticipatory reactionary point, right? If you don't know when you should be looking to trade, why are you trading? They don't have an anticipatory reactionary point, right? And the far biggest issue is the entry time frame is where they are trying to build the narrative. I spelled that wrong. 2 R's. Right? This is by far, right? This is by far the biggest issues with everybody who do and don't understand the ICT concepts, right? You don't know where Picasso lives, have no idea, right? You don't have an anticipatory reactionary point, meaning the area where you should be looking to try to participate in taking a trade, right? And then you don't use the higher time frames to help build your narrative. You're trying to build the narrative from the bottom up. Okay? Now that we have said all of that, right? Now that we have said all of that, right? The best way for me to show you, right? The best way for me to show you how to learn how to do it properly is to look at old price action and then show you how it looks after it happens. That way you can start to train your eye to understand what you need to be looking for as far as signatures. Okay? So let us do that together. All right? We can delete this now. Now I'm going to leave it there. All right, so we're going to go up to our monthly time frame. We're gonna go up to the, wait a minute. Let's do this before we go up to the monthly. All right, let's we'll just go to the monthly and do it. We're gonna put it in replay, and we're gonna wipe January off the board. We just wiped January off the board. Okay, January don't exist right now. Okay, so now we look at, what did I just walk into? Tim is hype. What's up, M Rich? Right, so we looking at the monthly charts, but we already wiped January off the board. Okay, so now you want to look at your higher time frame, and you want to say, what's going on? What's going on? What's going on? You want to see what's going on, right? And not only do you want to see what's going on your instrument of choice, right? Since we're you want to check correlated assets. So whatever your instrument of choice is, you need to know what are the correlated and inversely correlated assets to your instrument. For what we deal with around here, the US index futures, there are three sisters, right? You have the ES, right? You have Inquisha, the NQ, that's what I trade, Inquisha, and you have YM, right? So the ES, Inquisha, and the YM. Okay? So you may want to look and see if there's any type of divergence amongst the three sisters. Okay? You want to look at if there's any divergence. Right? So you look at them side by side. So we're going to put the Dow on the top, right? The ES in the middle, and the NQ on the bottom, right? Can I do it over here? Yes, I can. When we wipe January off the chart, right? We see that, well, let me ask you, do you all see any divergence for the month of December? Right? Does it appear that we are having some divergence? If you think it's divergence, put a 1 in the chat. If you think, hey, there's no divergence, put a 2 in the chat. And if you don't know what divergence is, you need to take up a French class, because that's French. Oui. I see 1. 1. 2. 3. I need at least 5. I need at least 5. If I don't get at least 5, I'm getting my feelings. 4. They say, no, don't let Tim get in his feelings. Don't let Tim get in his feelings. Y'all know how he get. Y'all know how he get. Okay. So we see that we have divergence, right? So when divergence is there, now we understand that there may be there may be difficult, rough seas ahead, right? There, because divergence creates chop. You know what I'm saying? Divergence creates. So this not only is letting you know that the markets are decoupled, but this letting you know what kind of environment you may be in. You need, all this stuff is important, right? So you'd be like, hey, I may be in for some high resistance environments. You want to know that stuff when you're doing your top-down analysis. Okay? So now we understand divergence. Divergence is afoot, right? We got divergence, and then we see that price overall on the monthly time frame is bullish, right? We came here, we consolidated there for a few months. We expanded up. We traded down, took out sell side liquidity, respect the bullish order block, respect the fair value gap, right? Wick back up. The very next month, right? We came down back into the bullish fair value gap, respect consequent encroachment of the wick, right? And then we started to move up from there. Here in December, we came above the buy side liquidity again. November, we took out the high. December, we took out the high again. And then we wicked nice rejection off of the high. Remember when we said the three sisters was showing divergence, right? So the ES and the Dow made a lower high than the NQ, right? What type of divergence, what type of SMT is that, right? If you think it is bearish divergence, if you think it's bearish SMT, put a 1 in the chat. If you think it is bullish divergence, put a 2 in the chat. What do you put? Well, I drink some water, and I see that it's 6:39, and I got a 7 o'clock Q&A with the mentees, so I got to go faster. Now, all jokes aside, it's bearish divergence. Any type of divergence at the highs is bearish. Any type of divergence at the lows is bullish. Now, we took liquidity, had a nice rejection off the high, and we have bearish divergence, right? So, anytime price expands, right, especially if it expands and it runs into a PD array, you anticipate price to at least retrace back to equilibrium. If you don't know what equilibrium is, look that up, right? So since we got a nice rejection, we've expanded above buy side, we got bearish divergence, right? This rejection coupled with the SMT, right? Coupled with taking liquidity, right? Now we're anticipating a retracement, right? Why are we not anticipating a reversal? Because we don't try to call the tops. We just look for the retracement and an opportunity to participate in the way of the train that's rolling. Okay. Then we look to below us and we say, what is below this last candle, right? The only thing we have below us, we don't have any imbalances here. There's no imbalance there, right? So we look lower and we see that we have a bullish order block right here, right? So we got a bullish order block right there. Right. So we're watching that bullish order block. This is a monthly time frame. It has a huge wick up there. So I'm not going to mark out the wick. I'm just going to mark out the body. Right. But keep in mind, right, you also want to be watching consequent encroachment, right, of any wick. That's a big wick. He has a very big wick. Okay. Right. So that's our monthly time frame. Right. This is a monthly anticipatory reactionary point, right? What makes that a monthly anticipatory reactionary point? Tim, what is an anticipatory reactionary point? An anticipatory reactionary point is a PD array in which you anticipate price to hit, get stopped, and sent back the other way, right? Because you're looking for it to act as a discount or a premium PD array. And if it's a discount PD array, we're looking to buy off of it. If it's a premium PD array, we're looking to sell off of it. That's why we wanted price to hit it, get stopped, and sent back the other way. Oh, I just knocked my phone down. There you go. Sent back the other way. Okay? And then, since we want that to happen, because we buy in a discount. So, if price is coming down, to a discount, we want price to hit it, get stopped, and then sent back the other way. Right? If we're coming up to a premium, we want price to hit it, get stopped, and then sent back the other way. Right? That's our anticipatory reactionary point. Okay? So once we pick that out on the higher time frame, right? Now we have something that we can look for price to draw into. Okay? So on the monthly time frame, we have a wick, right? We have a wick, right? And then we have a bullish order block. Okay? Now I ain't wasting my time leaving the wicks on there. All right? We also have old high, right? We got old highs down there. I'm not wasting my time putting those on, but those are PD arrays. Okay? Those are PD arrays. I'm looking for the ones that I feel that price will most likely draw to on that time frame. Okay? Now, let's go down to our weekly. On our weekly time frame, did we chop off? Yes, we did. We chopped off January, right? So on our weekly time frame, right? This right here is our monthly PD array, right? There's no need for us going below our monthly PD array and start marking out weekly PD arrays. It's just a bunch of junk on our chart. There's no need for me to come over here and mark out this bullish order block on the weekly because it's below my monthly time frame. Who cares about you? I'm not looking at you until we start disrespecting this. Then I'll start looking at you guy. Okay? Now that we've got our monthly, we go through and we mark out anything starting from the top, right? Looking for anything we need to mark with the weekly. So on the monthly, we started up here because this was a huge wick on the monthly. Let's go back for those who can't, who can't see the seeing. All right, we're going to go back to, what did I just do? What did I just do? Okay. All right. Anyway, let's put us a line here from the top to the bottom. And then we're going to thicken it up. Right? Now we're going to go to a weekly time frame. Right? That right there. This candle, this candle, this candle, all these bodies, all of these bodies here, right, are in there because this is where the month closed, right? So if I do that like that right there on a weekly chart, right? If I do like that on the weekly chart, then if we go back to the monthly chart, right? Let me extend this out. I got to extend it out pretty far. See that right there? Right? All of them bodies. And then, let me do this right here. Right? All of those, God dog it, Tim. Oh, yeah. This right here, this one of them weird months where we got a day that's inside. So I got to come to the end of the month. So this right here is the 30th there. Right? I got to come here because we got a day that's inside the month. All right? That week, I'm sorry. I said a day. But that week is inside the it's 2 days. It's inside the what's the name? God dog it. Okay, now when I go back to the monthly, see, boom, there you go right there, right? There you go right there. That's the close, that's the open. So on the weekly time frame, when we go to the weekly, right, all of these bodies right here, I got to take January back off again. Right, when I go back to the weekly now, see, all of these bodies here, right, except for the body come down there because we got 2 days. But during this weekly chart, all of that is what makes up that wick, because we open here, went all the way up there, then price came all the way back down. So we got a huge wick. Okay, for those who don't understand how to see it from time frame to time frame, everybody can't see that, right? May not be for you, but everybody can't see that. Now on the weekly time frame, right, we're looking at what do we want to mark out on the weekly time frame, because we see here the weekly has closed there, right? The weekly has closed right there. At the time when you would be looking at this at the beginning of the month, that monthly candle would be, you know what I'm saying, it'll be like another candle over here for us to look at on the weekly time frame, right? Right, it'll be another candle over here somewhere because it's a few days. But anyway, we're looking at, matter of fact, let's put that candle on there. Okay, so now, nope, that still ain't it. That still ain't it. Oh, that was it. All right, so now here we go. Boom. When you coming in here, the next month, this how it'll look, because that first week gonna be on there. All right, so now we're looking at what PD arrays do we want to mark out on the weekly time frame. Okay, so now on the weekly time frame, remember, we don't want to look below our monthly time frame, right? We just want to look inside the range of the monthly. That's our monthly high. This is the order block right there, right? That's the monthly order block. There's a monthly low in here. It matters not if the monthly low, it matters not if the monthly low is higher than this monthly order block, right? Because this is a monthly PD array we're anticipating price to retrace into. But you don't want to go in there and start marking out weekly PD arrays below your monthly time frame, right? Because the higher time frames rule. You don't only want to start looking at the weekly if the monthly starts disrespecting this, right? And if you've marked out your anticipatory reactionary point correctly, it shouldn't try to disrespect that unless you're just wrong, right? Unless you're just wrong, okay? If you've marked it out in the discount, in the case of a retracement down to discount, and there's no other monthly PD arrays below it, right, and it starts disrespecting it, hey, then you're just on, you're offsides, and the market is reversing on you. Okay, now on the weekly, what do you want to mark out on the weekly? Anything from the monthly up to where price is, right? If you're anticipating it to come down, right, you're looking for PD arrays below price, right? If you're anticipating to go up, you're looking for PD arrays. If you're looking for it to go up, you're looking for PD arrays below price. If you're looking for it to go down, you're looking for PD arrays above price. So if you're bullish, right, you're looking for PD arrays down here to react off of. If you're bearish, you're looking for PD arrays above price to react off of. Okay. Hopefully I ain't confused you like I confused myself. All right. So we have, if we look over here, we see that we have already traded down through this propulsion block right here. Right. So there's no need for us to mark that out. Right. We've closed below the mean threshold of that propulsion block. No need to mark that out. Right. We have a bullish order block right here. Right. So we got a bullish order block here on the weekly. Right. That bullish order block is right there above there. We also have a inversion fair value gap, and right, a bullish fair value, a reclaimed fair value gap here, because we got back on top of it here and reclaimed this bullish fair value gap, and we traded above and closed above this bearish fair value gap. So we have a inversion fair value gap here. You can look at this as just an inversion fair value gap, or you can take into account the bullish fair value gap that's directly opposite of it and call that a balanced price range, right? You can call it a balanced price range if you want to. In this case, we're just going to mark it as a balanced price range. Okay. We're marking it as a balanced price range. Get it? Got it? Good. Okay. So boom, balanced price range on the weekly. All right. Now, whatever else you choose to mark out, that's on you. That's all we're marking out, because ain't no fair value gaps. Ain't no need to be marking a whole bunch of stuff. Okay. Now on your daily time frame, you come in here. There's not a whole lot that I want to be marking out on the daily outside of possible liquidity. Why? Because where we are on the daily chart, right? We're at, right, our higher time frame anticipatory reactionary points, right? We're here. We're at our anticipatory reactionary points. So there's no need for me to go ahead and be trying to figure out, oh, I got this, I got that, I got this. I ain't trying to figure out all that, right? The lower I go, the less I'm doing, right? So I'm just going to mark out some liquidity here on this daily chart, right? And we're going to mark out some liquidity down here. Right. Boom. Liquidity. Right. We got that marked out. Right. That's all our stuff marked out on our daily time frame. Right. Now, at this point in time, you just watch price and trade in accordance to where price is and what's going on. Right. Right here, we said that the overall time frame is bullish, right? We're anticipating price to retrace back down into this monthly order block right down here, right? Retrace back down to that monthly order block, right? We're looking for price to retrace back down into that monthly order block. Let's move this over here so we can keep everything decent and in order. Oh man, it's 6:56. I got to be getting out of here soon. Okay. So this is where we anticipating price to draw to right now. This is one way to help you figure out where Picasso lives. Okay. If you know anything about market maker models, right? If you know anything about market maker models, right? You know there's a point of initial consolidation, like the important points: an initial consolidation, a smart money reversal, and then back to that initial consolidation, right? Those like the three major spots you look at: initial consolidation, a smart money reversal, and then back to the initial consolidation, right? So you, and looking at this daily time frame, you be like, hey, this kind of look like a market maker sell model, right? And then you be like, okay, this look like a market maker sell model that we haven't completed. And then that market maker sell model look like it can be inside a bigger market maker sell model that we haven't completed, right? And once you identify that it kind of looks like one, right? And then you be like, okay, if you split it down, if you got a spot where you can see like a clear turnaround, be like, hey, that's my smart money reversal right there. That means I'm on the right side of a market maker, whatever model. And if you know you're on the right side of a market maker model, right? Then you can say, I need to, in a case of a right side of a sell model, I need to be looking for reasons to sell. In the case of a market maker buy model, if you're on the right side, I need to be looking for reasons to buy. That's one hip pocket training way to think of where does Picasso live. And then once you figure out where Picasso lives, because we're in a market maker sell model, we're on the right side, right? We're anticipating to come here because that's, you can tell this is the initial consolidation, and then possibly coming here because you can tell that's an initial consolidation, because you can have a sell model inside of a sell model, kind of like you have a child inside of the mother for like 10 months. Same thing with price. It can rest inside, right? Right? Look at the camel hump. Look at the camel hump. Okay. All right. So once we figure out where we are as far as a market maker model, now we understand where Picasso is. Okay. And then now that we have everything marked out on our, down to our daily, let's just jump down to a 60-minute, because I'm going to tell you why I like to jump down 2 time frames down. Daily, 4 hour, 60-minute. That's 2 time frames apart. Daily, skip the 4 hour, go to the 60-minute. 2 time frames down, right? This right here, the daily, is our narrative time frame. We're going to circle this area right over here, right? We're going to circle that area there, right? Because that right there, we're going to say that's our initial consolidation. We're going to push up here, and then we're going to come back down to there, right? And now we're going to jump 2 time frames down, 60 minutes, right? And when we squanch this back up and we look at this squanched up, oh my goodness, don't that look like a market maker model, right? Doesn't that look like an initial consolidation, right? A smart money reversal, right? A low risk short, right? We got a fake me out here where we dug deeper. Why did we dig deeper? We came and take out some significant lows, right? And then now we're coming back down, right? Now we're coming back down. So we're looking for reasons to sell, right? And now that you know you're looking for reasons to sell, right? When you go into your 60-minute time frame, right? This is our structure time frame. Okay, on your structure time frame, you're going to be looking for reasons to sell. What did I say you're looking for if you're trying to sell? You're looking for things above price to sell off of, right? You're looking for things above price to sell off of. So you don't want to get caught trading a 2022 model, right? You don't want to, now it can help. It can work sometime if you're trading against the grain. But when you're trading in the direction of the bias, you don't want to get caught looking for a break in market structure here, a fair value gap created here, and a retracement to buy off of to go up when the draw is down here. You want to just let price do whatever it's going to do to the upside and then give you a break in market structure down with the fair value gap down to trade off of, because the draw is below you. All right. And with that, I yield my time because I have to go hang out with the gang. All right. That's how you map it out. And then we see here, right, once we got down to our anticipatory reactionary points, we stopped at the balanced price range. We never made it to the monthly order block, right? Price came back, gave us a break in market structure to the upside right here, right? And then this is when we said this right here appears to be our smart money reversal, because this is what we was talking about right there, right? That's when they asked Tim, does it look like we're in a market maker buy model now, right? And I said, now we need to see if this is our smart money reversal. We need the confirmation, because this looks to be our smart money reversal because we came to our anticipatory reactionary points, right? And we got a break in market structure. This appears to be the smart money reversal. This appears to be the low risk buy. And then when we got the confirmation here, right, and went up, we said, okay, this is our first area of accumulation. Now we know that we're in a market maker buy model. Look back that way. We said this right here. We're looking at this as the initial consolidation for this market maker buy model, looking for price to take out that high. And here we are today, and we are there. All right. Here we are today, and we said that we started talking about this coming here, back here on the 15th. And here we are at the 22nd, and we are here. And this, everything that I just said, that's the exact top-down analysis that we started with way back here at the end of December, early January, right? The beginning of January, that's everything that we marked up coming into this time, right? Beginning of January, we marked this stuff up. January 15th, we talked about this on the live stream, and here it is, the 22nd, and we're here. That's the top-down analysis approach that we use. That's the same top-down analysis for any model that you use, and you look for certain signatures in price. Just like here, if you anticipate in price to come to this order block, and remember I said these are our anticipatory reactionary points. We don't have to get to the lowest one, right? When we get to our anticipatory reactionary points, we start looking for signatures, right? What signatures were we looking for, right? The question came up. Hey, are we in the market maker buy model now? Let's look for the signatures. Institutional sponsorship, short-term high, short-term liquidity, depending on the time frame you're looking at, but that's the short-term liquidity for this institutional sponsorship, right? Displacement, high time frame displacement here, taking out that short-term liquidity. Now that short-term liquidity has been neutralized, we're looking for the confirmation that this is the smart money reversal. That's the low risk buy. Trade back down into the discount, into the imbalance, right? And displace away. Now we know that this was our first area of accumulation. Tim, how do you know that? Because we accumulated long orders here at that bullish breaker right there at that old bullish order block. We accumulated long orders. How do you know we accumulated them long orders? Because we have what we call over here offset accumulation, right? We accumulated the orders, we attacked the sell side, and then we displaced away. That's called offset accumulation, right? Offset accumulation. He one of the amigos. Offset accumulation. Boom! We know that that's our first stage of accumulation. Reaccumulation, I call it, because it's on the right side of the model, right? First stage, reaccumulation. Moved up, second stage, reaccumulation, right? Enter here at that second stage reaccumulation, low risk liquidity run into your target. I rest my case. This stuff freaking works. Hey, sorry for the super long explanation. We didn't get to the price action from today, but I feel like this right here was much more valuable than anything I could have talked about in price action today. Thank you. I think it was the Black Al Davis for the hard-hitting question. Now, I got to go over here and meet up with the gang because I'm 6 minutes late. Let me see if the gang got any questions. Gang, where y'all at? Mentees. I'm fun to go in the mentee chat. I'm asking the mentees if they got any questions. If the mentees ain't got no questions, then I'm going to take me a break for an hour until it's time to get on there with the boot camp.
Hey, Tim.
What's up, Vern?
I got a quick question. Could you explain institutional sponsorship?
Did you not just hear me say I got to go, Vernon?
It doesn't have to be long. Just a quick explanation.
Ain't no such thing as quick. It ain't no such thing as quick when it come to talk about that. We got. Wait a minute, Vernon. You are you in the boot camp? Are you in the boot? Oh, you're not in the boot camp? Oh, I was going to say, we just went over that in the boot camp. I was about to get on you, Vernon. Oh, I was about to get on you. But it ain't no quick thing. I can't explain it quickly. But if you go look at the art of reading price action, there's a video on institutional sponsorship. Go look at the artery and price action playlist. There's a video on institutional sponsorship, and then ask me, what are you in? Let me look at your profile. Vernon, you a whole mentee. Vernon, we fun to get on the call. We fun to get on the call. We'll talk about it, and we'll talk about it on the call. We about to get on the call now.
Okay.
Yeah. All right, y'all. We fun. I'm about to go. So I'll see y'all tomorrow at 6 for the price action recap. Tomorrow is Thursday. Yeah, I'll see y'all tomorrow at 6 for the price action recap. Hey, until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. Remember, my name is Timothy Lee Rogers Sr. Oh, yeah. I forgot to say, if you enjoyed this, if you got something out of this, please share this with somebody who you might think can get something out of it. Also, if you want to schedule a one-on-one with me, it's the second link down in the description. Is for if you want to schedule a one-on-one. If you feel like I can help you with some stuff, hey, feel free to pull up on your boy. Check my calendar, see when I got it available. It ain't free, costs $150. Check the calendar, see when I got some openings. Second link in the description. And then, like I was saying, it's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Don't get scared, man. That's just big spot if you don't hablo español. Y'all be safe out in these trade streets, man. I'm gone.